Everyone, Paul here. Today's going to be the final video of this strategy. It's a combination strategy. This is using a proper method that I kind of figured out on my own. It's the 9-90-95. It's also mixing it with the 1348, which is the first trading strategy that I learned about when it came to trading. But this is using both in a combination strategy, and this is trading on a longer time frame to find the best results. So what I do is I do look on the daily, but if I do not find if I do not find the signals on the daily, I'll go down in time frames, because the longer you go in the time frames, the better your results should be. If I really need to do a trade for a day, I might go down to the hour only to see if it's a good, if there's a good pattern there. But you know, I'll start with the day, but most likely I'll wait for there to be a signal on the day, because you usually get the best results, either the day chart or the 6-hour chart, one of those. But I'll show you how to set it up. We're going to be looking at gold. This is going to be the last time I talk about this strategy specifically. I wanted to cover all the assets, and it covers it really well with gold. You can easily find the patterns. You can find direction, and if you know the direction of gold, you can really blow up an account, because gold is like the top the top assets out there. So if you understand it, you can make a lot of money from it. But anyway, let me show you how to set it up. Okay, so real quickly to set this up, first you want to set up your 9-90-95. Now you can do this a couple different ways. You can go to your indicators, and you can go to 3 smooth moving average, and you can punch in 9-90-95. Now if you punch it with just the moving averages, you're not going to be color coded. It won't be color coded with the colors. So you can do that way. That way you have all 3 on one indicator. I do it with the Ghost Market Pro, which is a paid indicator. So I put the Ghost Market Pro swing on here, and I just uncheck all this, except for the 90-95, and then I have the 9 loaded here. So that's the way I do it. I do it because I have the paid indicator and it's less space. But you know, for this you would have to have the Ghost Market Pro. It's not required. The regular way, which is the way that most people probably would do this, is you go to CM. You go to CM, EMA trend bars. You're going to click this 3 times, and you're going to put 9, 90, 95, and it'll come out more thick, but I like to make it less thick, so that my lines are like less thick. That's just the way I have it. But with the CM EMA trend bars, the colors, the lines, the moving averages, they'll change based off of the direction. So there's that. And then the next thing is you want to go to your indicators, and you want to go to direction. It's difference of 2 moving averages. So once you get difference of 2 moving averages here, you want to input your settings to 13 and 48. Now, it's optional here to put things like RSI and stochastic RSI, which is other indicators that I look at. I pop them in every once in a while, but it's not required. But really, for this strategy, I want the average person just to focus on these 2. Now go to your day chart and zoom out here on the price of gold. And what you really do when you zoom out, you really can visually see all the good moments of getting in. So what we want to focus on first is we want to focus on the moment when the 9-90-95 is crossing. Because if the 9-90-95 is crossing on the day, you pretty much understand what direction it's headed towards. If it's crossed down, more than likely the direction's going to start to be going down. If it's crossing up, more like the direction is going to keep going up. So If you find a cross with a 9.90.95, that's a really good time to get in trades, in my opinion. Because a lot of the times, and especially if you do this on the day, you will see that if you draw a line where it crosses, and you can do this on the 6 hour too if you want, but nothing more than that. If you draw a line where it crosses, usually it does not come back to that point for a very long time. So this is why this is such a powerful strategy. So from the cross, let's just say that you missed this cross right here. The next point of you getting into trades is looking at your EMA difference, which is the 1348. And like I said, this is visually, you can visually see all the good moments of getting in right here. It's like, it's visually staring you right at the face. It's like a light bulb is turning on and it's telling you when to get in these trades. The light bulb is turning on. It's basically telling you all the good moments of getting in when you look at this on a long-term point of view. So right here is when it crossed. So this would be the start of it, and you could have ride this one out here, and then it went down a little bit, and then it goes back into being light green again. So this would be the next moment to get in for the trade. You want to focus on, if it's up, if it's going up, you want to focus on the 1348, and you want to focus on all the green moments, all the moments when it's a light green. If it's in a bullish pattern, you want to focus on when the pattern is, when it's going light green. So basically you would come in right here. You see it on the 1348, you would enter your trade right here. And you would stay in the trade as long as it stays light green. And when it gets and turns dark green, that's basically the moment to get out. But yeah, so right about here, you exit your trade. It basically tells you when to enter and when to exit. So right here, this is an 18-day move, and this is 113,000 pips. This is 113,000 pips in 18 days. 113, what was the number here? Let's just go over this number one more time, and I'll show you how easy this is to find. This is real easy to find if you're doing this on your own. Let's just stick with those numbers. 107,486. 107,846 or somewhere in there. And if you did this at a penny, you would have made $1,000. You basically would have made $1,000 in 18 days. So then it goes back down. It goes back down. You don't pay attention to when it goes dark. You don't pay attention when it's a dark green or a dark red. And I'm going to show you situations to where, I'll show you bearish moments too. But you see it turn light green right here. So this is a short one. Right here to here, this is still a pretty good one. This is 30,000 pips. So this is $307 if you did it at a 0.01. And then we got it again. You go dark green right here if you come back right here. And you ride this one out till the end. It's basically color-coded, and it's basically telling you when to get in and when to get out. This is a 47,000 pip move. This is $470 for a 0.01. Now, you see brief moments like here. Since gold is pretty volatile, you'll see standalones like right here. You could try and catch that one, but you could see from looking at the EMA difference that this trend is getting weaker. So use your best judgment for that. You can tell that it's starting to get a little weaker by looking at that. But we are still in a bullish run, so it can catch a lot of those moments. So right here, right about here, it turns light green. You could ride this entire thing out till right here, and this is another 138,000 pip move. This is another $1,000 move, but based off of a 0.01. And then you see one for 2 days here, and then you see another big move right here. You see another big move right here. From here all the way up to here, you see 198,000 pip move in 21 days. So this is, I think this is 1,000. I believe that's $1,000 move at 0.01. And then you see it again here. You see a small 1 day here, and then you see another small move right here, here to here, turns light green. This is a 59,000 pip move, so this is $590 for a 0.01. Another day move right there, and that's where we currently are. Now, if gold crosses down here, we will be in a bearish moment. So the exact opposite will be done if these do cross. If the 990.95 start crossing it in the downturn here, we will be in a bearish moment. But let's look real quickly. Let's look at a bearish moment here. You see it crossing right here, so this would be a good moment to get in. You also see it with the 1348, so that would this would be a sell moment right here. If you rode this out to here, it's the same thing. You'll just be looking for light red instead of light green. First, it has to cross with the 990.95, and this is a 46,000 pip move. I think this is $468 in 15 days. And then you see it again here. You see a brief moment right here, it turns light red, and you ride that out. This one's a small one, right here to here, and then you have another 28,000 pip move. And then you see a big one right here. You see turn light red right here, and then you write it down. This is 104,000 pip move. This is about a 1,000. This is $1,000 in 10 days if you did it with a 0.01. So then that's how you do it with bearish. Real quickly, I want to show you how to do this. If you want to do this on smaller time frames, personally, what I would do is I would look to see it. If you want to go smaller time frames, you can for intraday stuff. But I would first look at it on the day and see what it's doing on the day. And right now, we can tell that it's an uptrend. May not be for long, but it's because it is getting weaker. But we are currently in a uptrend. So if you want to go to your 6 hour, since we do know that it is an uptrend, you do want to focus on the moments where it's going up. So since we know that it is a uptrend, you want to focus on light green. So you see that here, see it here, there, and you see it right here. See all these moments. You want to do 6 hour, right here, here to here. Works the same way. So it works the same way if you want to go down in time frames, but let's just go real quickly to a smaller time frame. Let's go to an hour. Now, as you go down smaller times, it becomes more risky. We know the trend's going up, so we focus on the moments where it's going up. So you got moments like right here, where it turns light green. You can come in right here. Ride this out from here to here. This is more intraday. This is a 23,000 pip move. And you can see those moments. And you see it right here as well. There's a small one right here. So this is why I like focusing on doing it on longer time frames. It's more choppy doing it on the hour and smaller time frames. But if you really look at it on the day, you'll get the best results because you're not looking and you're not focused on all the choppiness. Yeah, if you do, if you do get in, let's say one of these moves right here where it turns light green, like here or here, it is going to fluctuate. It is going to be going up and down because this is gold and it's one of the top assets out there with a lot of volatility. So anyway, that's how to use the 990.95 and the 1348 strategy for gold. It works really well. It works the best if you find this on longer time frames, but it's just a combination method that I believe works really well. It really shows you all the good moments of getting in and out. And if you do focus on doing it like on the day, and I didn't even show you the week, but if you do find crosses on the week, you'll make a lot if you do find this on the week. But I didn't go over that because on the week, the likelihood of a cross is it's less likely than find it on the day. But I personally use it on the day just to find it, and you can find all the key moments by looking at the 1348. You know, basically, if you're in a bullish trend, you look at all the moments where it starts to go light green, and you ride it out until it goes to dark, the first dark green bar. And the same thing for a bearish. You look for a light red, and you ride it out till it turns into a dark red. And you could usually find some pretty good scalps doing it on the day, and then doing it the day or the 6 hour, you'll probably get the best results. But gold is very volatile. So anyway, if you guys like this strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.